Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting a new topic in advanced aspects of income tax. The new topic is income tax rates. Last video I have completed agricultural income and a number of videos I have prepared on computing the tax liability when a person is having agricultural income and non-agricultural income. Hope my regular viewers are watching continuously all the videos and got a good command on the subject of income tax. Now in this video, completely theoretical, no problems at all, but these are very important for doing the problems. If you skip this video, definitely the coming problems will be very difficult for you. So watch the video till the end. In this video, I'm going to explain you what are the different rates of tax. What is the classification of SSCs? What are the different heads of income? How to compute the income? How to compute gross total income, and classification of incomes into normal income, casual income, and special income. Apart from that, tax rebate under section 87A, and lastly surcharge. These are the topics I have planned in this video. So watch the video to get a complete command. Before that, take a screenshot of the notes which I have written on the board so that you can be able to maintain the notes, and it will be very helpful to revise all the provisions before examination. Take a screenshot, then I'll explain all the points. Come on viewers, now I'm going to start the topic income tax rates. First of all, our current assessment year is 2021-22. The assessment year is the year in which the income tax is computed for the income which is earned in the previous year. Previous year means 12 months immediately preceding the assessment year. The current previous year was 2021 and assessment year is 21-22. So whatever discussion I am making here is relevant only for the assessment year 21-22. First of all, income tax is a tax on the income of a person. The person means an individual, a firm, a company, etc. But our discussion here is confined only to individual. So in India, we have Income Tax Act 1961 which govern the income tax subject. So it says every person has to pay income tax on his income if his income exceeds the basic exemption limit. Income Tax Act has specified what is the basic exemption limit for every year. So in this video, I'm going to explain you what are the different exemption limits. If the person's income exceeds the basic exemption limit, he is liable to pay income tax. He is liable to pay income tax. So what are the basic exemption limit? It depends on the status of the person. Income Tax Act has classified the individuals into three categories. The first category is non-senior citizen. A person, an individual is said to be non-senior if he is below the age of 60 years. Below the age of 60 years, he is called non-senior citizen. The basic exemption limit for a non-senior citizen is 2,50,000. Basic exemption limit 2,50,000. In other words, if a person is below 60 years and during the previous year his total income is not exceeding 2,50,000, up to 2,50,000, he earns up to 2,50,000 in 1 year in the previous year, no tax liability. If his income is more than 2,50,000, he is liable to pay tax. For which assess is non-senior, below 60 years. If a person is 60 or more but below 80, 60 or more below 80, he is called a senior citizen person. And for senior citizen person, the basic exemption limit is 3 lakhs. Now lastly, a person who is 80 years and above, A person, an individual who is 80 years and above, the basic exemption limit is 5 lakh. That means if a super senior citizen person is there, if his income is below 5 lakh, no tax. If his income is more than 5 lakh, he is liable to pay tax. So these are the basic exemption limits for the current assessment year 2021-22 for the 3 categories of employee SSCs. The 3 categories of SSCs are: first one non-senior, second senior, third super senior. That's the first one. Secondly, heads of income. Income tax will be applied at only one rate of tax on the total income. A person may have different types of income. So different, separate calculation of tax will not be made. The incomes will be clubbed together. All the incomes will be added. On that total income, a tax will be applied. But how to compute the income under different heads? Income Tax Act has given the procedure. How to compute the income under different heads. After computing the income under different heads, add up the total income, and on that total income, tax will be levied. That is the procedure. And income may be received either in cash or in kind. Income Tax Act says it is not necessary that always your income should be in cash. Even if you earn an income which is in kind, the Income Tax Act has given the rules how to find out the value of that income which is received in kind. The income which is received in kind, how to calculate the value. Income Tax Act has given the rules. Those rules we have to apply to convert the income from kind to cash. Then next, following are the 5 heads of income. Income Tax Act has classified the incomes under 5 categories. Income from salary, income from house property, profits and gains of business and profession, income from capital gain, income from other sources. These are the 5 heads of income Income Tax Act has specified. So a person's income will be computed under these 5 heads. It is not necessary a person may have only one head. A person may have different heads of income, different sources of income he may have. So income from salary. Income from salary will be applied to those individuals who are in employment. When employer-employee relationship is there, then income from salary. For example, Mr. X is working as a manager in ABC company. So there is a contract of employer-employee relationship between the company and Mr. X. So whatever salary he will get, he is taxable under that income from salary. But it is not necessary that every person will be in employment only. Every person will not have income from salary. Secondly, income from house property. If a person is the owner of a property, house property, and he has derived some benefit income from that house property by giving them on rent, that rent received from the property let out, that is taxable under the income from house property. Then profits and gains of business and profession. A person may run his own business and earn the profit, or a person may carry on his profession like a doctor, engineer, lawyer, chartered accountant. So these are professional people, they carry on their own profession, they earn the income. That is also taxable under profits and gains of business and profession. Income from capital gain. If during the previous year an SSC has transferred a capital asset and earned some income. Example, a person has purchased some jewelry some 10 years back. Now during the current previous year, he sold the jewelry and earned the income. That is called capital gain. And if any capital gain is arise, it is taxable under the income from capital gain. Last, 5th one is the residual head. That means if any income does not come under the first 4 heads, it is put to tax under income from other heads. It's an open head. So any income which does not fall in the first 4 heads is put to tax in income from other sources. Already in the last video I have explained much detail about income from other sources and what are the items that may come under income from other sources. I have explained in detail. So these are the 5 heads of income. Now gross total income, GTI. The gross total income is the aggregate of income of all the 5 heads. When a person is earning income from different sources, he is an employee, he is getting salary, he is having some property which is let out, so he is getting the rent, he is having income from house property, a small business he is running, so he is getting profit from business. During the previous year, he sold some capital asset, got the capital gain. Similarly, he may be having some dividend income or interest income like that will be taxable income from other sources. So when we add up all the incomes under the 5 heads, the aggregate of the incomes under the 5 heads is called gross total income. From gross total income, deductions are given by the Income Tax Act called deductions under section 80C to 80U. So a person, an individual may be eligible for deduction under section 80C to 80U. So from gross total income, give the deductions from 80C to 80U if the individual is eligible. Everybody will not be eligible. Conditions are given when you can claim deduction. So if you get the deduction, deduct. The resulting figure is called total income. Simply, total income means gross total income minus all deductions. Next is structure or elements of tax liability. For the current assessment year 2021-22, the elements of tax are 3. That is, first one, basic income tax. Secondly, surcharge. And thirdly, health and education cess. These 3 are the elements of income tax liability. Now, health and education cess at 4% is calculated on the total income tax. First, you calculate the basic income tax. To basic income tax, surcharge will be added if applicable. Surcharge will not be there for everyone. I'll explain you in the last topic of this video what is surcharge. So surcharge is there, but it is not there for everyone. Some conditions are there for surcharge. So basic income tax plus surcharge plus health and education cess at the rate of 4% will be applied. Now tax due is equal to tax liability minus tax deducted at source, TDS, minus advance tax. Now how much in SSC has to pay the tax due will be calculated by calculating his tax liability. From the tax liability, deduct the TDS, tax deducted at source, and deduct the advance tax already paid during the year. Resulting figure is the tax due, remaining amount tax due. Sometimes what will happen, the TDS and advance tax will be more than the tax liability. Suppose the tax liability is 1 lakh, but the TDS and advance tax paid is 1,20,000. That means the SSC has paid more tax than he is liable. Now 20,000 rupees will be refunded by the income tax department to the SSC. That is called refund of tax. Next topic is income tax for individuals. Income tax for individuals. So all the SSCs, individuals are classified into 3 categories: non-senior, senior and super senior. Who is a non-senior? A non-senior is an individual person whose age is below 60 years. Under 60 years, he will be called non-senior. Senior means he attained the age of 60 years and above, but below 80. 60 and above, below 80, he is called senior citizen. A person who is 80 years of age or more, he is called super senior citizen. So presently all the individuals are classified into 3. Now we have to see, because the rate of tax, the calculation of tax liability will differ according to his age, according to his category. So tax liability we have to see whether he is a non-senior, senior or super senior. Just now I told you 2,50,000 is the basic exemption limit for non-senior. 3 lakh rupees is the basic exemption limit for senior. 5 lakh rupees is the basic exemption limit for super senior. Next, classification of incomes. The incomes are classified into 3 categories. First, casual income. An income which is unexpectedly received. An income which is received by an element of chance. That is called casual incomes. An example of casual incomes are winning from lottery, horse races, crossword puzzles, or gambling, betting. All these are the casual incomes. So Income Tax Act says casual incomes are taxed separately at 30% flat rate. 30% flat rate. No basic exemption. No basic exemption will be given for casual incomes. Second, special incomes. Any income where a flat rate of tax will be applied. A flat rate of tax will be applied. It is called special income. And no basic exemption. Sorry. Basic exemption will be given. Basic exemption will be given for special incomes. Now, normal incomes. Any income which is neither casual income nor special income is called normal income. And normal income, there is a slab system. We don't have a flat rate. We have different slabs. 0%, 5%, 20%, 30%. So 4 slabs are there. So that I'll explain in the next video regarding what are the different slabs. That is called normal income. Now next topic is tax rebate under section 87A. Very important for the coming problems. All the theory which I am explaining, remember, is very, very important, because without understanding this, you cannot do the problems. Problems are completely dependent on this discussion. So concentrate fully and watch till the end. Tax rebate under section 87A. Tax rebate means the concession in tax. This concession in tax will be given to the lower income people. Income Tax Act has given one benefit to lower income people by giving a rebate. Rebate means reduction in tax liability. So when it will be given and how much it will be given, now I'm explaining. So tax rebate means concession in tax payment. Tax rebate is allowed to lower income persons. Least of the following two will be allowed as reduction. How much tax rebate? Least of the following two. What is the list? Actual income tax or fixed amount of 12,500. So first of all, we calculate what is the actual income tax of the SSC. Suppose the actual income tax of the SSC is 10,000 and fixed amount given by Income Tax Act is 12,500. So 10,000 or 12,500, whichever is least will be allowed. So 10,000 is less, so 10,000 will be allowed as tax rebate. Suppose if the income tax comes to 15,000, actual income tax 15,000, whereas fixed amount is 12,500, whichever is least, 12,500 is least, that will be allowed as reduction. So actual income tax or 12,500, whichever is least, will be allowed. Now conditions for claiming tax rebate. When the tax rebate will be given, 3 conditions are given. The first condition, only individuals can get tax rebate. A company, a HUF or a firm will not get tax rebate, only individuals will get. Secondly, the status of the individual should be resident. That means if the residential status is non-resident, he will not get tax rebate. Only resident SSCs will get tax rebate. And thirdly, the tax rebate will be given only if the total income of the person is up to 5 lakh rupees. If the total income of the person is more than 5 lakh, tax rebate is not allowed. The limit is given. If an SSC's total income is up to 5 lakh rupees, exactly up to 5 lakh rupees, tax rebate. Over 5 lakh rupees, no tax rebate. That is the condition. Note that if the total income is over 5 lakh, no tax rebate is allowed. Non-senior and senior citizen are entitled to claim tax rebate. A rebate shall be given before charging any cess. Only non-senior and senior citizen may get tax rebate. Super senior citizen will not get tax rebate because their tax liability will start only after 5 lakh. His tax liability, super senior tax liability will start only after 5 lakh. So there is no question of tax rebate for super senior, only senior and non-senior. And tax rebate will be calculated before charging any cess, any education cess. Next, last and final item in this video is surcharge. Surcharge is additional tax. Surcharge is the additional tax or tax on tax. Tax on tax. First of all, we calculate as usual the normal income tax. After calculating the normal income tax, we have to see whether surcharge is applicable or not. If surcharge is applicable, we add the surcharge. It is a tax on tax. So normally surcharge will be applied to higher income groups. An individual and a person who is having huge income, then government says we have to put more tax on him. The tax on tax is called surcharge. Surcharge means additional tax. It is levied as basic income tax. Surcharge is defined as tax on tax. So surcharge is imposed on every person whose income exceeds 50 lakh. First point. No surcharge will be applied if a person's income, total income is up to 50 lakh. Over 50 lakh rupees total income, surcharge will apply. So first of all, you have to see whether the total income is 50 lakh or less. If it is 50 lakh or less total income, no surcharge. If the total income is more than 50 lakh, definitely surcharge will apply. Now, rates of surcharge is as follows. Now, carefully you remember. Up to total income of rupees 50 lakh, no surcharge. Up to 50 lakh. That means 50 lakh or less, no surcharge. Then if the total income exceeds 50 lakh, but up to 1 crore. Up to 1 crore, 10% of the basic income tax. 10% of the basic income tax will be added as surcharge. If the total income is more than 50 lakh, but up to 1 crore. If the total income is 1 crore, from 1 crore and below 2 crore, above 1 crore but below 2 crore, the surcharge will be 15%. If the income is above 2 crore but below 5 crore, it will be 25%. If it exceeds 5 crore, if the total income exceeds 5 crore, 37% is the surcharge. The surcharge will increase as the income increases. No surcharge up to 50 lakh rupees of total income. Over 50 lakh rupees up to 1 crore, 10%. Up to 1 crore, 10%. Then over 1 crore up to 2 crore, 15%. Over 2 crore up to 5 crore, 25%. Over 5 crore, it is 37%. That is a surcharge. Last item is health and education cess. The government is imposing a special tax for development of health and education. This is a compulsory statutory tax, 4% on the tax. 4% of the tax. So first we calculate the basic income tax. To this we add the surcharge. The basic income tax plus surcharge. Whatever total you get on that total income or total tax, you calculate 4% health and education cess. If there is no surcharge, simply we calculate the basic income tax. On that basic income tax, add 4% of health and education cess. And this health and education cess must be paid by every taxpayer. That's it. So this is the end of this video. In this video, I have explained you about different topics of tax rates, classification of SSCs, and what are the different types of incomes, GTI, total income, tax rebate, and surcharge. Inshallah, we'll continue this theory in the next video.